I want to look at some of the changes now for JobKeeper version 2. So let's have a look at what's changing in summary. So the first is that JobKeeper has now been extended, as we're probably all aware, to the 28th of March next year. The government's come out and said, look, we need to keep giving stimulus to businesses to keep people employed. Otherwise, we're going to have absolute bloodshed. The second thing that's changing, though, is that you're going to have to reassess for eligibility. So for those who've been with me along the course of this journey, who are on the session, will know that we were very strong in letting people know that eligibility was once, and once you were eligible, you were going to be eligible for the rest of JobKeeper. That was the case up until the end of September. The change now is that you're going to have to reassess your eligibility not once, but twice to get you through to the 28th of March. And that's going to be very important. And the clock's already started ticking on that. And quite smartly, the government has made the first eligibility period one that's already happened, not one that's going to happen into the future, and I'll cover that shortly. Eligibility is now going to be based on BAS quarters, not months. So we won't be saying, okay, well, we weren't eligible April, but we are eligible May, so we'll get into the system. It's also not going to be prospective. So it's not going to be able to say, well, okay, we believe that we're going to be down 30% over the next 3 months. Therefore, we're going to register and be eligible. The other key thing is that the payments are going to reduce in 2 stages. So what we've become to be very familiar with, the $1,500 a fortnight or the $750 a week, is going to drop. And it's going to drop for the first stage, which is the December stage, we're calling it. And then the March stage is going to be a second stage where you're going to have lower payments. And those payments are also going to be changed in terms of where you sit with the hours that are worked by employees. So there was a lot of conversation about casuals who maybe are long-term casuals, but they only work 10 hours a week. They were actually getting more money on JobKeeper than what they were getting when they were working. So it's quite interesting how the government's taken a different stance on that. And we'll talk a little bit about how the split rates are arrived at. So the first part I wanted to talk about was how will payments change? So the first part of the change is going to be the December quarter, what we're calling the December stage. Now, you'll see some things written in the media and certain releases which go to the 3rd of January and dates that are just a shade off the quarter. Don't get too worked up about that. It's just people being technical and working with the pay fortnights. To make this easy to understand, we just split it down into 2 stages, the December stage and the March stage. Now, the first of those, the December stage, once JobKeeper 1 finishes at the end of September, you'll go into the December stage. And the December stage is basically saying, okay, we need to look at the payments, and we need to say, well, okay, we're no longer going to get $1,500 a fortnight, we're going to get $1,200 a fortnight. And that's if you're working over 20 hours per week. What you will also then find is you will find that the payment for under 20 hours a week will be $750 a fortnight. Okay? So that's going to alter as well. The March stage will dip yet again. So you'll go down to $1,000 a fortnight if you're working over 20 hours and $650 a fortnight if you're working less than 20 hours. That's going to be critical to keep those 2 things there. The 20 hours is going to be based for eligibility purposes and which bracket you go into based on an average from February 2020. There are going to be rules that will work around that, and I'm expecting there to probably be changes come in as to how it goes moving forward through the stages, but it's going to be critical to work with that above 20 hours, less than 20 hours aspect of things. Just want to go to the eligibility criteria. To be eligible in the December stage, you are going to have to look at the June quarter as well as the September quarter. So that's the first stage of December. Your eligibility period will be a 30% decline on the June quarter and the September quarter. When you go to the March stage, your eligibility is going to be a 30% decline on the previous year for not only the June and September quarters, but also the December quarter. So there's going to be 3. And it's an and. It's not an or. So you have to do June and September, be eligible in both of those for a decline on the previous year to be eligible for the December stage. Now, you can see by looking at that that what's going to happen is there's going to be a number of people get caught out, particularly on the June one, because June's already over. The government, I believe, has intentionally made it that because it doesn't give anybody the chance to manipulate their data. June's already happened. June BASs are being either done or already done for the June quarter. So you're not going to be able to go back and gild the lily and make it work, which was one of the things that was a problem with JobKeeper 1, was you were able to massage a few things around, rightly or wrongly, and get people into the system. There are people there who've moved income from one entity to another to get around it, and ethically there's an issue with that, with me. To be able to do it. We'll work within the rules, but there are some things which just get right outside the box. And it's like, really? Use this for what it's intended to be. So that's how the payments are going to change and how some of the eligibility is going to change as well. You'll be using your BAS data as opposed to prospective data, as I mentioned. So I'm expecting there to be a number of different things in and around the eligibility that will change and be introduced. We had alternative tests when we went through JobKeeper 1. And those alternative tests allowed us to look at growth tests for businesses that were in high growth modes compared to the previous year. It also allowed us to get concessions for businesses that had only just started. It allowed us to get concessions for businesses that had been through periods of drought or disaster. So there were concessions there. So it's going to be interesting to see how those alternative tests move in terms of eligibility for June, September, December. Collateral damage, though, is going to affect a number of different industries, and there's going to be some possible losers within this. Not only people who just on the bare face of it just don't meet the 30% anymore, but it's also going to affect some businesses unintentionally, I believe. The first of those is possibly what I call a recovering business. And this might be a business that was a youthful or young business, and by that I mean, you know, they're not startup, but they're growing into their skin in 2019. Or it might be a business that had a really bad 2019, like I mentioned, drought, bushfire. Bushfires really come into 20, but you know, those prior periods, as we go and look at it, particularly when we're looking at the December quarter, that comes into bushfire stuff. So there's going to be a number of different unintentional consequences here. And if you're a recovering business and all of a sudden you've got to compare what you're doing now to what you were doing 12 months ago, Sure, you didn't have COVID, but if you were a young business or a low revenue business last year, then even though you're still recovering on your best days, you're comparing to maybe some of your low days. And I see that as a bit of a problem. The other problem is looking at businesses with temporary boosts. So for instance, if you were a business that, I hate the word, but pivoted to doing, say, hand sanitizer or masks or PPE equipment for COVID, then you possibly have had a real boost in business over the last month or two. If you're doing masks and you're pushing them into the Melbourne market at the moment, you're doing quite well. Now, if you compare that revenue to last year, it may be a spike, and it may make you non-eligible for the June quarter, and you're out. Once you don't pass June, there's no passing go, there's no collecting $200, you're out, because you use the June quarter not only for the first stage, but also the second stage in March. So if you don't pass June, give it away. You're not going to get JobKeeper. And that will have some real impacts on people. Let's say, for instance, people who were on the plus side of the low-cost write-off. You might have been in office furniture, you might have been in the motor vehicle industry, and all of a sudden you've had a spike because the government's come out and said, hey, you can spend up to $150,000 on equipment. So if you're in any of those industries and you've all of a sudden had a spike again and it wipes out the June quarter, sorry, you're not going to continue in the JobKeeper system. Even if now, once you're past those changes, you've gone back to a suffering business, it doesn't matter because your June quarter has been wiped out and you're not eligible. So that's going to be really key. The other collateral damage that I see in this is in regards to low-hour casual staff. We're going to find some people who were working under 20 hours, and all of a sudden, where they've been receiving $750 a week or $1,500 a fortnight under JobKeeper 1, those rates, as I showed before, the rate is going to drop for those under 20. December, $750, moving through to March being $650, so effectively halved and then some. If they're only working 10 hours a week casual, and all of a sudden that's being ripped out from them, whilst there are changes coming in the job seeker environment, are they really going to be motivated to work anymore? Or are they going to drop out? So are you going to have people who are sitting there making a decision off their own bat as to whether they're going to work for your business or not? Now, that might not affect the majority of your workers, but it is going to be an impact. And if you run something like, say, a cafe, and the majority of your staff work between 15 and 20 hours, all of a sudden you've got people who are looking at the difference between receiving $750 and $1,200. So they're going to be chasing additional hours which you might not want to necessarily provide, because even though you're getting the JobKeeper, as we know, you've got to come up with the cash for this in advance and then get paid in arrears by the government. So you go back to the employee and you say, no, look, I just need to keep you on 15. What's the employee do? The employee either has to make up the other 5 hours that they need for their pocket elsewhere and then be non-eligible for JobKeeper with the next person, or they have to make a decision about where they're going to sit in terms of putting in hours for remuneration. It doesn't help with rostering. It doesn't help with trying to get that balance between looking after your team, looking after your business, and then also getting the right amount of people on the bus who are needed to run your business. So it's going to be a lot of confusion in the business space as to who do we need and how are they going to be paid based on these hours. So full guidance is yet to be released on a number of these areas. And this is where we're going to be working with businesses, I think, over the next couple of months to get this right. As I said, June's already gone. We can't change June. February, in terms of eligibility of hours, is already gone. I'd expect them to change that because it seems really restrictive in terms of an ongoing system. But who knows? We haven't got a crystal ball. We can only get the information out as it's needed. But it's important for your business now to be considering these things, because what does your staff structure look like at the moment, and where do people sit at the moment as it currently sits, and what are we going to have to be doing with them as we move down the track and we start getting into these other periods. So what, when, and how? What are we going to have to be doing? When are we going to have to be doing it? And how the hell are we going to do it? So the first thing is mid to late September is the eligibility assessment stage 1. So that's for your December stage. So that's the formal eligibility assessment. However, if you have your June BAS done, you have the information at your fingertips to determine whether you're going to be eligible or not. So why would you wait? Yes, they might change the system, but you need to know now what's coming in 3 months' time. So if you know now what's coming in 3 months' time in terms of receiving JobKeeper or not receiving JobKeeper, you can plan for it. So what we're doing with clients is we're moving to analysing this before that mid to late September, advising to the ATO as to where you sit, and making sure that we're ready for any changes that come in so we can continue to analyse that. So we've got to work closely together. You've got to work with your advisor, and like I said, there's no room for over-the-fence advice in this. It means too much. We've had businesses that have been getting small amounts of JobKeeper, 3,000, 6,000. We've also had businesses that are getting close to 100,000 worth of JobKeeper over the course of these of the months that are in that first stage. 27th of September is when JobKeeper 1 finishes. That's an important date because if you're not eligible in June, then you need to be planning for cash flow changes come that date, and staffing changes possibly. It's going to have a significant impact on the way you run your business if you are not eligible. Then when we move into that first phase, if you are eligible, you'll have November, December and January declarations to make for the previous months. So November's declaration is for the month of October, etc. Like we're doing now, but I expect there to be a little bit of extra information in those declarations that we need to provide. So the government, with their "we only want this information for data purposes," have now turned around, I'd say, and used that information to come up with an appropriate strategy to start to reduce JobKeeper in certain circumstances. And it's not necessarily a bad thing. As I said at the start, there have been people rorting the system and this will catch them, but that collateral damage is really going to hit. Mid to late December will be the second eligibility stage. So if you got through to the first stage, eligible, you've then got to turn around and determine whether you're still eligible for the second stage based on your December quarter. Now, obviously, with your September and December quarters, there's the ability there, by all means, to look at how your business operates and how your business would be eligible if it was, and how it's got to ride this bumpy thing. Not saying rot the system, but it's really good for you to know exactly where you sit month to month and each quarter before the time runs out. It's a bit like tax planning. You can't tax plan in July unless you're doing it for next year. So just like planning for JobKeeper, June's gone. But if you are eligible in June, then you need to start thinking about, well, okay, what's going to happen in the September, December quarters in our business, and how long will we be eligible for? You do your declarations February, March, April for the second stage. So it's all pretty simple, yeah? It all makes perfect sense, and we're all going to be able to weave our way through this as business owners. I'm saying no. I'm saying that we spend our days and nights learning this stuff. And I'm saying that you've got bigger fish to fry in your business than to worry about how you're going to weave your way through JobKeeper without any help. That's what we're here for. And I've pretty much claimed this hashtag of get great advice. I think it's a massive thing in small business that people don't reach out. For whatever reason it may be pride, it may be cost, but these things don't cost a lot to do when you look at the impact that they have on your business moving forward.